Let's talk more about the markets. Paul Hickey's at the table, Bespoke Investment Group, co-founder. Has the Christmas rally come early, and is there more to this, or is this a head fake?
Well, so I think if you step back and you look at the way the market has performed this year, the ebbs and flows of the market, and you compare it to the typical pattern going back to the 50s, it's followed step for step throughout the course of the year. There was a brief period in early October when we had the terrorist attacks in Israel and, the response, and where things got a little dicey there. But we've really followed that pattern. So I think if that pattern's to continue, you can certainly see strength into the new year. And, December is the most positive month of the year historically, and when you have strong years, it tends to finish strong.
Okay, so that's the short-term outlook.
Yes.
Give me the 2024, where are we 12 months from today outlook, because it factors in a whole other way. I think it will suggest a lot about the economy. It'll suggest potentially a lot about the politics of what's happening in the country.
Yeah.
What happens?
Well, I mean, there's so much. I mean, just you look at the Dallas-Seattle game last night. 3/4 of money was on Dallas to cover the spread. They didn't cover the spread. So if we can't even get a football game right, who in their right mind thinks they're going to know where the market and the economy is going to be?
Then what are you getting paid to do, my friend?
So what we do is every day we're looking at things from multiple perspectives and looking at how things go. And for 2024, we see a fairly good backdrop for stocks. So we were talking before about this low CPI print in November. The Fed is done hiking rates. That cycle is over. We could see cuts early in the year, but I don't think we necessarily need to see cuts in the year for the market to keep going. That was November 14th was a very important day. We saw the broadening out of the rally. We saw small caps outperform the S&P 500 by 3.5 percentage points. It happens 5 other times in history. It's a watershed moment. But more importantly, leading into that period, we saw the Russell 2000 oversold for 34 straight trading days. That has only happened 4 other times throughout history. And when you've seen 30 or more days when it's been oversold, it has been followed by positive returns for small caps every time. Okay. And what that's indicative of is that 34 days of oversold readings is just investors selling indiscriminately. Okay,
but this base case requires the Fed to do what?
The Fed to stay on hold and for inflation to come in.
For the entirety of the year?
Yes, I mean, the Fed is done. So I think
but you don't think but there's other people who think they're going to have to lower.
So, I mean, the market's pricing in April. I think
Jamie Dimon will tell you it's going to be the opposite, by the way.
Right. That's what makes a market. And I think going into looking, if the best thing for the market would be the Fed not to be cutting rates in April, because if the Fed comes in and cuts as early as April, that means there's bigger problems ahead. So what could go wrong? So you think about it. We're in an environment now that the Fed's done. Good news is good news again in the market for the economy, and bad news is bad news. So if we see weakening of economic data, the market's not going to like that. We have an ISM report today. A report above 50 would be positive. We've been in a recession on the manufacturing sector for over a year. That's historically been associated with recessions. But overall, I think when you see this broadening out of the rally, November, again, we saw the biggest easing of financial conditions in the Goldman Sachs Financial Conditions Index in the index's history, going back to the early 80s for over the course of a month. The only other even periods where we were close were 82, 91, and 2020. So, I mean, those were pretty good periods for stocks going forward.